Hello and welcome to our video on how to conduct an AML risk assessment. I'm Erin and today we'll be exploring the critical process of assessing and mitigating the risks of money laundering and financial crime for businesses in the UK. All UK businesses have a responsibility to prevent money laundering and other forms of financial crime. To achieve this, risk assessments are a vital component of any firm's anti-money laundering (AML) toolkit. These assessments help businesses gauge the likelihood of inadvertently supporting or engaging in criminal activities. The Money Laundering, Terrorist Financing and Transfer of Funds Regulations 2017 made it a legal requirement for UK businesses in the regulated sector to adopt a risk-based approach to their AML efforts. This not only helps reduce the damage done by money laundering in the UK economy, but also gives companies flexibility in designing and deploying their AML procedures. As a result, risk assessments can vary between companies and sectors. A money laundering risk assessment is a process that analyses a business's exposure to financial crime. It identifies which aspects of the business are at risk and achieves this by monitoring known vulnerabilities or key risk indicators, KRIs. These assessments are crucial for a risk-based approach and are integrated into a company's strategy to prevent money laundering. There are two types of risk assessments required: a company-wide risk assessment and a risk assessment of individual transactions. The company-wide assessment identifies external risks and areas within the business vulnerable to exploitation by criminals. Directors then design risk assessment procedures to identify potential transactions linked to money laundering. Certain businesses must conduct AML risk assessments under MLR 2017. These assessments help businesses use a risk-based approach, understand risks in relationships and activities, create policies to reduce financial crime risks, and make informed decisions about employees and clients. Businesses can monitor key risk indicators in 5 primary categories: the size and complexity of the business, customer type, products and services involved, onboarding methods, and geographical factors. These indicators help in assigning risk ratings to transactions or customer relationships. Directors and employees collaborate to identify how their business might be used for money laundering and how likely this is to happen. Training is crucial for staff to spot risks. The assessment reviews all aspects of the business and should be well documented to prove compliance with UK regulations. Consider risks related to your industry, business structure, products/services, processes, geographical areas, and distribution/payment channels. Review this assessment regularly and update internal procedures as needed. The purpose of an AML risk assessment is to determine if a transaction or individual is possibly involved in money laundering. It's based on intuition and knowledge of criminal money laundering methods. Adequate training and tools for staff are crucial in this process. Factors to consider in each risk assessment include clients seeking anonymity, third-party involvement, foreign clients, clients from high-risk countries, clients with high net worth, and more. These assessments should be recorded regardless of whether risk is found or not. Pay attention to high-risk activities, as identified in the UK's National Risk Assessment, NRA. These may include conveyancing, client account services, trust in company formation, financial technology services, cash-related services, and the use of crypto assets. A risk assessment is a crucial part of the customer onboarding process. It helps vet customers for money laundering and terrorist financing risk factors. Be cautious when dealing with customers acting against their profile and consider asking further questions or filing a suspicious activity report if necessary. To streamline your approach to risk assessments, consider tools like Red Flag Alert, which provides reliable data on businesses. This data can help you vet potential customers and verify their claims effectively. And that wraps up our guide on how to conduct an AML risk assessment. These assessments are essential for businesses to comply with anti-money laundering regulations, protect the economy, and prevent financial crime. If you want to explore how Red Flag Alert can improve your risk assessment process, get a free trial today or check out our guide on AML risk assessment. If you found this video helpful, please give it a thumbs up, subscribe to our channel and share it with others who might benefit from this information. Thank you for watching and we'll see you in the next video.